Happy Monday, YouTube. I wanted to get on here and talk to all of you guys that, are considering, buying live transfers or inbounds. So you're faced with which or the other, right? And it's a good position to be in, because regardless if you go with live transfers or you decide to set up with inbounds, you're talking to people that want to talk to you about final expense, and you're able to do it in a way that you can write a lot of insurance simply by talking to more people. But which one's better, in my opinion? And for a lot of you guys that have known me for years, well, you've known that not only have I, promoted live transfers, but I myself have been working them for years. Simply up until about 4 months ago, when I made the switch to final expense inbounds 100%, simply because the cost factor. It's at a cost now lower than it's ever been before. And especially with our buffer times, we get a major discounts from our partners that do all the digital marketing. So here you're facing the dilemma: should I buy a live transfer for, let's say, $35, $45? Or do I invest more money and buy a $45 inbound with a 15-second buffer, or a $65 inbound for a 120-second buffer? Which one? Volume is irrelevant, because you'll be able to talk to the amount of people that you pay for. Because with a live transfer and an inbound, you guarantee to talk to people. So you're paying a premium, obviously, compared to having to buy your leads and you do the dialing, right? You're paying a premium. But it comes down to two things for me. Why did I, 4 months ago, make that shift and slowly started shifting my agents as well as my clients that buy live transfers for me for years? I've been slowly transitioning inbounds into their system. Comes down to two reasons. The first one is risk. By buying an inbound lead, yes, I'm paying a little bit extra compared to paying for a live transfer. Let's say $10, $15 extra that I pay for an inbound on a 15-second buffer, let's say. But I don't worry about any DnC violations or any TCPA violations. And you get those typically when you do the outbound. With the inbound, all that is out the window. Because guess what? The customer called me. Whether they called on an infomercial, television, direct mail, etc., they called me. And in that moment in time, I picked up the phone. And if I know exactly what to do over the telephone, then I'm going to take them through the process of getting them some insurance. So because of that reason, there's no issues or any concerns with if that last phone call that you took on a live transfer or inbound, if there's any liability, because with inbounds, again, TCPA and DnC mean nothing because the customer called me. Efficiency. Because the customer's calling me in real time, in that moment in time, the level of their interest for my product is at the highest point. It's at that moment in time that if I can meet them at their point of need, I'll be able to help them get some insurance today. There's no question. That's the freshest you're going to get it. Live transfers. With live transfers, you're paying somebody else to do the dialing for you. That's what you're doing. Now, if you're providing that marketing agency your leads for them to call, or they have their own leads that they're calling on, whether they're cold calling or maybe calling on aged leads and then transferring you the call, well, you understand that those people that are being called on maybe didn't call today. They called a week or two ago. So the sizzle might not be there. They might have already purchased somewhere else. Bottom line is that someone rekindled their interest and then transferred it to you. But here's the biggest issue: the compliance aspect. When you're dealing with DnC and TCPA, a lot of overseas centers, what they do is they use avatar systems and they use it on raw data. And what I mean by raw data is any phone number that didn't opt in, where they asked for the information, any phone number that doesn't have an opt-in is considered raw data. And what they do is they blast the raw data in order for them to get more phone calls and save on their labor fees, promoting final expense. And then when someone presses 1 or they agree to the robot or the pre-recorded message, then they transfer it to an internal person, and then that person transfers it to you. That right there is a violation of TCPA. And a lot of overseas centers do that. They don't tell you they do that, but they do. DnC. Again, a lot of centers that do these type of transfer systems, they do not have an accurate do not call register system. So if they get 1% through your lines every single day of potential people that are on the DnC, whether state or national, there you go. You have a DnC fine. Think about that. And I'm telling you that is a risk that was one of the biggest contributors to us making a change. And that is that with the cost of inbounds, what it costs to generate an inbound compared to what it costs to generate a live transfer, it's not much of a difference. And you can eliminate the risk when it comes to TCPA, and you can increase your efficiency by talking people that want to talk to you. You're going to talk to a higher quality of prospect every single time your phone rings. And it's only going to get better, ladies and gentlemen. For us, we've seen the numbers grow. For some agents, they've skyrocketed. For me, I've seen my numbers grow easily an extra 20-25% in the last 4 months, simply because more of the people that I'm talking to are searching today for a final expense quote, period. So give me a call. I'll be more than happy to help you. Peace.